Hey Steve, Jamie, how you doing?
Hey guys, it's Steve. What is happening over
Hello.
there?
Hello, Jamie. Happy Monday.
Yes, indeed. Happy Monday, everybody, and thanks for popping in to hear what we have to say. Today is July 15th. July's halfway over. Boy, that means the summer is in essence halfway over. And boy, early part of the summer didn't really feel like summer market days, but boy, today kind of did. We'll talk about that. But welcome everybody. We sure do appreciate you popping in to hear our webinar today. And before we get going, just want to take a brief moment to talk about the disclaimer here. I'm sure all you regulars already know what's up, but in case you're popping in for the first time, just always like to take the opportunity to make sure everyone in attendance is aware of the fact that all the information that we share with you in this webinar or any of the other 8 webinars that we have coming at you every week is for educational purposes only. Simply meaning, please don't misconstrue what we have to share with you today as a solicitation to buy or sell stocks or anything else for that matter. If you do need investment advice, please seek out someone like a registered investment advisor or a licensed Series 7 stockbroker that can legally dispense that type of information to you. So everything we have for you guys is for educational purposes only. I think that'll get it done right there. And for the new folks that might be in here, kicking the tires for the very first time, we do like to take a moment at the top of these webinars to let everybody know about the vibrant community that we fostered around the technology that is Trade Ideas Pro. All kind of starts off up here in the upper left-hand corner with Barry's Trading Room, hosted by Mr. Barry Anderson. The trading room has gotten quite the overhaul as of late. We switched softwares. It's operating much smoother, much better environment than the old model that we had going there. And more importantly, lots and lots of people in there. Could be 400, 500, 600 people in there per day. So it's growing and will probably even surpass those numbers once the fall kicks in. The great thing about the trading room, other than, of course, Barry, is the price, which is free, right? You don't even have to be a TI subscriber to get in there and participate and see what it's all about. If you have taken the time to shop around trading rooms on the web, you know that if they're worth their salt, they're typically not going to be free, actually pretty pricey. So that is a great resource that we make available to everyone free of charge, and Barry does a fantastic job at showcasing his trading styles as well as the way he uses the Trade Ideas technology with the AI, all of his manual windows, so forth and so on. So if you haven't been taking advantage of that resource, by all means, don't sell yourself short. Get on in there and see what it's all about. Of course, today's Monday. You get myself and Steve, and then Steve's going to take the steering wheel tomorrow for the trade of the week, the 5 p.m. Eastern webinar hosted by Steve and co-hosted with by Andy Lindelof. Then Hump Day rolls around, good old Wednesday. We got Dan Merkin, the CEO and founder of Trade Ideas, along with our Chief Technical Officer, Brad Williams. Always interesting. They like to show what's coming down the technological and developmental pipelines, put a little bit different spin on the technology. So always interesting with those guys. As far as the 5 p.m. Eastern webinars go, we're going to round those out on Thursday with Andy's Trading Studio, hosted by, of course, Andy, and I ride shotgun with him. Excuse me. Friday rolls around, and that's when we change it up a little bit and do the Friday support session. Going to kick that thing off at 11 a.m. every Friday. That's Eastern time, and we allocate 2-3 hours for that one, depending on the crowd. Might go 2, might go 3 hours, just depending. But the cool thing about these, the Friday support webinar, is anything's fair game. So whether it's very basic questions or strategy fabrication questions, Holly questions, brokerage plus, anything is fair game. And you got myself, Steve, Andy, and Sean in there, all attacking the problem at the same time. So come one, come all to the Friday support session. In addition to the 5 p.m. Eastern webinars Monday through Thursday, we also have TI University, which also goes Monday through Thursday. These guys kick off at 12 p.m. Eastern each and every day. We do recommend that you take these in order because what you learn in 101, you'll need to build on 201, so forth and so on. Now, of course, some people have to go to the old 9-to-5 job. So if you find yourself in that situation and you cannot attend live, we have all of these pre-recorded and posted on our YouTube channel, Trade Ideas YouTube channel, along with a wealth of other videos on all different types of topics. So of course, if you can attend live, that's the best way to do it. But if you can't, since the content in 101 through 401 remains static, you can go get the next best thing, which is the recorded version if you cannot attend live. So once again, these all start 12 p.m. Eastern, Monday through Thursday. So all in all, 9 different webinars coming at you each and every week. All right, so before we get into the content for today, always just like to take a moment to show everybody how our user base has increased since the introduction of the first AI module way back at the beginning of 2016. Seems like it's been a lot longer than that, but only 16, 17, 18, here we are in our 4th year, and would expect the next bar to be even higher. In addition to that, this is not necessarily AI only related, but these numbers here, what you see on the graph here, ties into our Brokerage Plus and the release of Brokerage Plus to the masses, which allows you to trade through interactive brokers using our interface as opposed to their workstation. And whether you're doing your trades manually or automating some of your own strategies or even automating some of the AI Holly strategies, this is all lumped together. Basically just looking at live orders filled that have been pushed through Brokerage Plus, whether it's manual, automated, Holly, or automated through people's own custom strategies. So we can see live orders in blue, demo orders in orange, slowly increasing month over month. That's exactly what we want to see. It means people are indeed agreeing and using the product, that it is a more intuitive interface. Not to take anything away from IB, we love everybody over there. But when it comes to trading, you want things to be as simple and efficient as possible, and that's what we set out to make Brokerage Plus do. Just easier to execute, easier to get out of positions. Maybe you want to reverse a position. Maybe you were long, now you want to go short. You can do it with one click. So all kinds of good things stacking up for Brokerage Plus. If you haven't tried it out yet and you trade through IB, you might want to do that. All right, here we are. Today's topics of interest, and we started the day with a little gap up, quickly gave it back, and then once that opening 15 minutes was over, not a whole lot of room left in the market. And Steve, I guess if you're ready to talk about that market action, I can kick it on over to you and
Sure, I'm ready.
Take a look at the big indexes here, or the tracking ETFs. I'll kick it over to you. There you go.
All right. And there we go. All right, welcome to my desktop there. So what I want to do is start out with a little great example of where we were last Friday. I've got the chart backed up 5 days, and I talked about these 2 orange lines of significance, primarily this one right here, capping the prior high, all-time high that is, in SPY. And we had a nice pullback, a little bit of a shakedown below the 200, much like we did back here, and then an assault back up through. And what I'm going to do is just kind of fast forward and click into today's action. So 5 days are going to appear just like that. All right, now we can zoom in and kind of see the perspective of what I'm getting at. This orange line acted perfectly. I mean, absolutely textbook that we would want to have at a pivot line, especially at a key level such as a new all-time high. And what I mean by that again is this was the day that we last spoke on this calendar right here, and talked significantly, I think, about possibility of coming back to test this line. Well, I mean, I guess that's close enough for government work, that little space right there, but just a textbook example of, 3 steps forward, 2 steps back. If you're the guy who's buying the breakout here, once it feels safe to you, just be ready for the inevitable pullback. And if you want to gauge where that inevitable pullback is going to come to, look no further than the prior resistance becoming future support. Actually a double, triple test here, if you will, because the gap up through it, there was a lot going on at that level. So it made all the sense in the world, the buyers to kick back in to drive, short sellers to capitulate more. And Andy and I spoke last Tuesday on my webinar. We've seen many summer months. Any grizzled trader out there, I know there's a few out there listening today, has probably seen the phenomena in the slow summer grind up. We've had a few markets in the past, since I've been doing this for 22 years, where there's just a slow melt up. I hate to call it a melt up because that almost implies volume, but a low volume summer grind higher where it's just step, step, step higher and there's not much pullback. And we could be seeing the beginnings of that right here based on the last 4 days alone. It's just kind of a narrow range grind higher, and we've seen that before. And the reason Andy and I brought it up last Tuesday is there's really nothing out there in the news or the macro horizon. There's always a black swan, but there's really nothing out there the market seems to be worried about, climbing a wall of worry in that respect. So it's kind of free sailing in the macro news, the data that keeps coming out. Obviously the great jobs numbers, the Fed's trying to keep interest rates low and all that. But the price action is telling the story, and we could have seen the train kind of leave the station here for the next couple of weeks and see slow melt up or slow grind up, whatever you want to call it. So that's what I'm seeing in the in the market. There's no bear case at all to be made. We've got the moving averages perfectly fanned out. We've got the 50 above the 200 and the 20 above the 50, and then the momentum line, which is the guiding hand of momentum. It's a little sloppy here, but for the most part also kicked in there. So there was so much converging here, pivot line and momentum 10-period moving average as well. So we may have little pulls and fits and starts. More than likely, this moving average is just going to mirror kind of what's happening. And if we have intraday push downs where we test and then pop back up, those can be interesting types of entry candles, something along like that. So keep an eye on those kind of entries, perhaps moving forward. The NASDAQ we'll look at, the Qs, pretty much the same story over there. And speaking of the momentum line, a little sloppy there again, but for the most part, right on target. Buy signal right there on that 10-period moving average on the daily chart, and then a slow possible trains leaving the station, narrow range grind up days. We'll see. Where is that in relative to? Yep, just double checking there. All-time highs again in the NASDAQ. No bear case possible. The technology-laden sectors have kind of led us higher, and no reason to think that can't be the case here if it turns it back on. So now we have kind of an interesting case because there's some overlap going on here between tonight's webinar and tomorrow night's webinar, the trade of the week. The reason I'm saying that is the trade of the week is not a stock. It is a discretionary call that we found, and we've been talking about it for the last 2 or 3 weeks ad nauseum, and that's about the IWM. I've talked a lot about the value that might be sitting here in IWM. There's the rest of these ETFs we just saw going to highs. We have all this possible space where value funds could come in and decide, yeah, there might be the next move, the next baton, the next leg of this market could be driven by a quick pop in small cap stocks. And then confirming that is kind of looking at the daily pattern here. Beautiful pattern, a little sloppy on the moving average there, but we're not quite in momentum mode yet. We've been in a real sloppy, ugly, nasty range. But all of a sudden in the last 2 weeks, I'm kind of seeing something here. Nice sideways grinding action, letting the moving averages come up underneath and push and force the issue. Now the blue line is our trigger for the trade of the week. It did not trigger today, and that's fine. It has to back up and maybe try it again. But it would be a head start, of course, if it triggered to take out this level here. And once that level is taken out, then we're looking at this level here, hopefully, if it does work. And a side note to all of this, as also described in the trade of the week, for those that are a bit more experienced and a bit more adept, you could consider a trading vehicle called the TNA, which is a triple levered ETF. So if IWM, for instance, were to move 2% tomorrow, which would be great, TNA would actually move 6%. It's going to move 3 times the intraday closing price change. The problem is when you start to look at these things overnight, these have what's called a severe decay in them because of the way they reset and the way the formulas are. So they're not something you want to hold for long-term positions, but for 2 or 3 day swing trades, when you want to catch the move or the day and a half of the big move, nothing wrong with jumping into these things, and you will get a tremendous bang for your buck. So for those more adult swim only in the deep end kind of stuff, over the next couple weeks, maybe this area fills in. But that's the trade of the week idea. We'll talk definitely more about it tomorrow and see if anything develops. And then lastly, we usually finish off with the Dow. Again, nothing to say bad at all, other than we might be getting a little overstretched. We've got this little moving average coming back way here. Always possible for an opening half an hour drive down to these moving averages, and that can become interesting. But I guess there's no bear case, but the only caveat to make is that we're getting a little bit of little bit of space in between the momentum line and the last few days of candles. Typically, when we get that space near, it's kind of a Bollinger Band effect. It tends to have a reversion back to the mean, and the mean being the 10-period moving average. So that's really all I'm seeing, Jamie. Again, just to rehash, there is no bear case in sight to be made. Market doesn't seem to be worried about too much at all, and we could be having just kind of the beginnings of a summer grind higher with narrow ranges back and forth, but net changes grinding up at the end of the day.
Very good, Doctor. I concur. Good stuff, Steve. I'll go ahead and grab it back from you here.
Got it.
All righty. So interestingly enough, here's where we opened on the SPY, right up here at the top of this candle. We can see whoosh, a big old swoosh down there, and then we're left with the rest of this for the day. So, you know, all the way from the top here, what was the open there? 301.13. We bottomed out about not quite a point in this range here, but just barring, you know, taking that guy out of the equation, unless you just closed your eyes and shorted this morning, then you really didn't get to participate in this type of move right here, which leaves us this for the remainder of the day. Not exactly the easiest environment to navigate when it comes to intraday trading. And, you know, a lot of things were pointing to kind of that type of action today. So number one, volumes were pretty lackluster. You know, when we take a peek here at the major tracking ETFs, IWM, of course, as Steve was just pointing out there, lots brewing under the surface, came in at 0.81. The Dow came in about normal. But the big boys here, SPY and the Qs, came in about 60% of normal, which doesn't make things easier, so to speak, as well when we have a range like this. You know, hey, we're going down. Hey, we're back up. We're back down. We're back up before capitulating down here at the bottom, and then catching a little lift here heading into the close. But what, you know, how could we have kind of got a heads up, or, you know, throw a little bit of grass into the wind after the first 15 minutes? Typically, I like to look to my compare count windows for that. And after that first 15 minutes, we had a bearish count. Now, it's no big surprise here because, well, you got this type of action going on in the first 10 minutes with a little blip on the third green candle there. But, you know, when I see a bearish count, or a bullish count for that matter, when we've got such a little swoopy move on the open, kind of throws things off kilter a little bit. You know, like to see more of a smooth opening, but hey, we don't always get what we want in the marketplace. But nonetheless, after the first 15 minutes, looking at what the big boys were doing, or, you know, when I say big boys, any company coming through here capitalized in excess of $4 billion, hitting highs and lows with significant volume, we got 55% to the red side. Of course, after, you know, knowing where we are, what neighborhood we're in, breaking out on the SPYs and most of the other major tracking ETFs, you know, if we did come down, you know, we always have to think to ourselves, well, today is going to be a down day. Well, we're not going to have a whole lot of room here, and we can see we never really even got down much into Friday's candle here. So when I see this marginal bias to the downside, when I say marginal, I mean, it barely gets up to the 55% criteria. And typically, you know, the only way you can get worse is below 55, 54, 53, 52, even 50-50. That kind of lets you know that, you know, there might be a little bit of short-term action, shorting action. There might be a little bit of long-term action, but not a whole lot of trend one way or the other. So, you know, keeping in mind that we saw this with a big swoop down in the opening 5 minutes, just kind of makes us go, well, anything's possible. And that's kind of what we had in the first, you know, let's see, 8:30 to about the first 2.5, 3 hours before we bottomed out and started heading back up here. So having said that, how did Holly do today, right? And we can see right here by focusing on the toolbar, of course, we all had front row seats, so we already know how Holly did today. Being long biased today on, what do we have here, 18 trades and different risk modes for each and every module. We had 1.0 in risk off, we had 2.0 in full risk mode, and then we had Neo finishing in risk on mode. Once again, a perfect testament to what we saw. in the first half of the day as we chopped around in this little range here before bottoming and heading maybe about halfway back up. So, you know, up day, but up on a red candle. Mainly it was all gap, and then, you know, gave back a little bit and got it back. So Holly, being the statistical model that she is, didn't see a whole lot of opportunity today. Matter of fact, after everything was said and done, she was down a little over, let's see, we could call that 1.3. We'll just keep that at around about a point and a half, assuming we were trading 100 share lots here. So if we backed out 30 from one, call that 160, we're still sitting at 130, but a good thing to point out here, and maybe some of you have been sticking your toe in the automation pool, seeing what that's all about. So one thing we have to keep in mind if we are going to automate Holly, probably summertime and these days probably is not the best environment, but I always like to run the numbers here and kind of put people's expectations in check here. So the thing about automated trading is when Holly's up, we're always going to make a little bit less than she made because we have to factor in commissions and slippage. So on a losing day, you probably have already guessed this, if you're running full Holly auto and she loses money on the day, like today, down about $1.30, about $1.40 on 18 trades, you're always going to lose a little bit more than she does because once again, we have to talk about commissions and slippage. So just a quick tally here. I won't bother creating a little spreadsheet here or anything, but if we had 18 trades and we're trading in Interactive Brokers, and we say $2 a trade, even bump it up to $3 a trade, that's around about 40, 50 bucks in commission. So we would have to tack on another 40 or 50 in commission, and then we can easily calculate slippage, something to the tune of, oh, and I thought I had a calculator here. I'm too lazy to do it manually. But if we just say 18 trades, and factor in 6 cents of slippage per trade, that's 3 cents on the entry, 3 cents on the exit, we get about another point that we have to add on there. And if we're doing 100 share blocks, that's another 100 bucks. So on a day where the AI is down about $1.50, tack on commissions and slippage, you're going to be down about another $1.50 for a total of 300. So just remember that moving forward, whether you're already dabbling in automation or whether you're saving it for the fall, you're always going to make a little bit less than she's posting on a winning day. And then because of slippage and commission, you'll always be losing a little bit more than she does on a net losing day. All right, so just wanted to kind of throw that out there. And of course, Holly did have a long bias today. Hey, why wouldn't she in a market environment that we've seen as of late, just hop, skip, up, 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 right? But just because we're in an up market does not necessarily mean because we go long, whether we're a computer or a human, that we're guaranteed anything. And today was a perfect example of that playing out in real time. Now, we usually like to talk about how we can capture some risk on, risk off spread here. Not a whole lot of that to go around today. We've got about a couple of good examples here that we'll touch base with. But we did have quite a big winner from a percentage basis today in a small dollar stock, which, alluding back to what Steve was talking about with the Russell and the small caps trying to play catch up here, it's no big surprise that one of the small dollar stocks, in this case Workhouse, $3.55 stock, was the biggest winner. And for those of you who've been paying attention as of late, Holly's posted some pretty significant gains on these small dollar stocks. Now, typically we've got a couple of small dollar strategies in there, Mighty Mouse and Little Big Guy. Of course, they weren't even present today. It was strong stock pulling back that found the workhorse, as in workhouse. Workhouse, workhorse, workhorse actually. And boy, was it a workhorse today. So let's look at this one first off, because this one had some very nice characteristics about it. Coming out about 30 minutes into the open. Now this is very interesting because when we get to the end of the webinar here, and I show you some of my opening range break setups, to the long side, I mean, you might as well have not even bothered. There were no quality setups, excuse me, to the short side, I mean. You'd be hard pressed to find one decent setup. Now there are plenty of stocks going down, but finding one that met the criteria that I looked for was next to impossible. They were all the long side, all right? And they all were about this same time, right about the 30-minute mark, maybe slightly before or slightly after, but I found that very interesting looking at the manual trades that we'll take a peek at here in a little bit versus this one, which kind of met the same characteristics with the added benefit that it was Holly who brought it to our attention. Strong stock pulling back. So let's just take a peek here. And by the way, I've got my strategy panel on the all strategies panel, so I don't have to look at the individual Holly segments here. And the same thing with my all trades blotter. We can view all the trades now instead of viewing the individual Holly segments. So that's how you get to that functionality. Should be available in the latest beta. So strong stock pulling back. What kind of odds did that little guy come to the party with today? 63.4% after all the back testing and analysis was done as of the close Friday. He spit out 3 trades, or I could say he, she, it, whatever. It's just a strategy. 3 trades and won 2 out of 3, so it slightly overperformed today with a win rate of 66.7, hitting 2 out of 3 trades. But definitely this one was the shining star. So what do I like about this trade? Let me just stretch this out a little bit. These are 5-minute candles that we're looking at here, opening candle right here. So nothing really crazy happening on the open. A little bit lower than the prior close, does a little sideways action right here. But of course, me being a person who really likes crispy range breaks, well, it just so happened that Holly brought us this one right there as a range break was occurring because it was pulling back a little bit, all right? A little run up, 5, 10, 15, 20 minutes, takes a little shimmy back down here, coincides perfectly with this range break here. So let's count up the positive attributes of this trade. We got statistical probability from Holly. We also have what I like to call that auxiliary pattern playing out in perfect real time. You know, sometimes she does them a little before, sometimes a little after, but this one just right on the money, okay? So we got 1 gold star with statistical probability. We got an auxiliary pattern, which happens to be my favorite playing out, gold star number 2. Oh, at this time of the day, see how it finished with relative volume of 1.89, but this relative volume was much higher back here early on because the volume, as you can see, not too bad in the opening 5, 10, 15, 20, 30 minutes, but man, really accelerating right into that signal that Holly put out. So we got Holly with statistical probability, we got a secondary pattern unfolding, we got raging volume, all right? 3 great ingredients to have in a long trade. Added benefit, of course, this is the 5-minute. Let's go ahead and tighten this time frame up to the 15-minute. Check out that 10-period fast line. And we can see, now we're just looking at it in the different candles, perfect range break, volume, statistical weight behind it, and look how this thing is adhering to the fast line, right? Even when it takes its little pullback here, doesn't even touch it, bounces like there's a force field there, kicks it back up into play. So a beautiful entry on many different fronts here from Holly. Now, we can see here, she made it the whole duration. Why'd she get out? Timed exit, corresponding with the shaded area right here. Timed exit, strong stock pulling back, designed around a 45-minute hold time. So she just does what she's programmed to do. There's no thinking. She just closes the trade because that's what she's supposed to do. Of course, this is where the risk-on aspect comes into play. Do we like what's going on? Did this give us any fits once we made the entry? Nope, just immediate gratification, not even attempting to back off whatsoever, like it's going to stop us out. So strong from the very beginning. Of course, we all know strong stocks can't just go straight up. Sometimes they do for X amount of time. Takes a little bit of pullback here, but then sets up for that second up move. And guess what, ladies and gentlemen? When we see this occurring, go a little sideways action right here, adhering to the 10 period. What does it do when it comes right back up here? Boom. Another clearly identifiable crisp range break here. It's already working for us. You may have heard, whether you've been in the seat for years or maybe you're brand new, some of the basic 101 trading rules. Add to your winning positions, all right? Not so easy to figure out though a lot of the times. But when they set up in such a simplistic manner here, this is always a great time. We had 1 range break here, we get the run, buyers and sellers become equal, takes a little nap, comes back up here, busts this level again. we could have easily amplified or leveraged our position here, taking us into the biggest move of the day, topping out right up here, just a little over 413 here. So not huge on the dollar amounts, but considering the stock, was a $3.55 stock, 355 up to 413. I mean, that's over 50 cents in a $3 stock, and this thing was up over 10% at the top here. So, take the good with the bad, kind of evens out the equation here since Holly didn't have that great of a day. But keeping in mind how she's been doing very well with the low price stocks as of late, and being able to identify a couple of other things on this pattern could have helped you really milk that thing today. So workhorse fit its namesake today as far as trading goes. Great little trade. Next on the list here, the only thing showing a spread other than these guys down here, we got a 9-cent spread, we got a 3-cent spread here, but this guy right here, Bud, 0 and 24 cents. Now, when we look at this chart right here, this is classic, in my opinion, of Holly saying, you know what? If she was a human, she's like, yeah, this thing's not working. I don't want to lose money. I might as well just go ahead and flat it here, all right? Been there, done that umpteen times. I'm sure a lot of you out there have done the same thing. I'm sure Steve would agree. And then as soon as you get out, ripper, ripper, ripper. Of course, this one didn't really rip. It just kind of meandered along sideways and then bumped up a little bit towards the close. But reduced risk. Why would Holly get out of a trade early? And when she uses reduced risk and profit save, that's exactly what she's doing. Those are the two audibles that she can call, other than her profit target, stop loss, and timed hold, right? So we get into this one here at 88.29. Bud just kind of going sideways, throws a little bit of wiggle. Hey, we're going to get stopped out. No, gives it one more push here. We wig down to here, but never hit that hard stop before. Boom. Getting back up on top of that fast line there. So we got a little bleedy here. So Holly basically just calls it right here. Hey, I gave it a shot. Things not working. I'm going to cut my losses or reduce my risk here. So she flats it. All we would have had to have done on this one is just stayed in the trade, stuck with our hard stop. I mean, obviously break even was not an option here because it's just hugging that line pretty much all day and never really gets legs till the close, right? I forget what stock it was the other day. It was another Holly trade that did the exact same thing as this one, but boy, it got up and boogied towards the close. It was one of those large percentage winners again. So, bottom line is stop never got triggered. If you would have stayed in it, you could have pulled a quarter versus Holly flatting it. On an $88 stock, nothing really to write home about, but hey, in a market environment such as we had today, money is money, even if it's a quarter on an $88 stock. And pretty much the only other risk on opportunity we're taking a look at here, I mean, technically Micron fit the bill, but we got 3 cents in there. I guess on a percentage basis, 10 cents versus 7 is pretty big, but we'll just go ahead and take a look at 2 because it was the only short sell today that, where anything was possible. And even though this chart looks fantastic, it's just not a big, this move looks a lot bigger than it is since the entry price was 13.22 and down here is just 10 cents lower, but it sure does look good. So once again on 2, time to exit. That was topping formation. Let's see, topping formation here, right at the top here, 60-minute hold time. So once again, Holly doesn't care. She just does what she's programmed to do. We can see right here an entry. This one also throwing a few wiggles, but not quite making it up to the stop. I guess I'd have to squish my chart up here. Can't even still see it once I do that. Maybe on the daily here. There we go. Okay, so we had a stop way up here at 1372. And since this is only 10 cents, just can't get it to show up on my 15-minute chart. But bottom line is, it looks very similar to the Bud trade, just to the downside, ebbing and flowing around the entry line before finally releasing after Holly gets out of it. Could have stuck to that hard stop and got that big 10 cents there. So that's pretty much it for risk on, risk off today as far as Holly goes. Just kind of, once again, glancing at the strategy panel here. Only two strategies were able to pull any coin out. one was 2 on the dime, and then strong stock pulling back, performing pretty well. Everybody else having just a one-off and 0% success rate, with the exception of Count de Monet coming in with 2 trades and not having any luck there. So a lot of the times that I can recall in the past, when we have a day like this, she likes to make up for it the next day. We'll see what happens. There are no guarantees. So all in all, just kind of a lackluster day for Holly. Lackluster performance, but then kicking out one shining star that kind of evens up the equation here. So slightly down on Holly today. We'll see what she produces tomorrow. All right, looks like the questions panel is pretty empty. So let's just cruise on over here and talk about some of the opening range breaks that did set up in a decent fashion, where we could identify them in real time while having, you know, as small a risk as we could have today. It was definitely slim pickings, and they all came out right about that magical 30-minute mark today, just as the big winner in Holly was produced today. To the downside, turbo breaks down. Setups were virtually non-existent. Everything was all stretched out to the downside. So when we saw these things hitting lows, there was no smooth consolidation to identify, but not quite the case on the upside. We had, let's see, 1, 2, 3, 4, 5 different decent looking ones here that we're about to go over. And then we'll talk about one that failed, but how it could have led us to another one that we could have capitalized on. All right. So without further ado, and once again, these are all being issued from the original Turbo Breaks Up alert window, which anybody out there that wants to try that window out, all you would need to do to go and grab that window is to come down here to channel 4 and click on channel 4. That will give you not only my favorite windows, but Steve, Sean, and Andy's as well. And you can always save those to your cloud, make them part of your environment. So let's take a look at TSU first. And notice the time that TSU came out, all right, 9:04. Remember when this guy came out, workhorse 9:08, Central Standard Time. I'm at 1 hour behind Eastern. So here we go, looking at TSU. Notice these opening, 15-minute doji-ish type of candles here. Got a little sideways action, and then at that time, boom, we cracked that level right there with decent volume, because that's part of the turbo breaks up and down configuration. Got to be doing decent, or actually 3 times normal 1-minute volume, to let us know, hey, this is happening with high volume on the smaller time frames. And we can see what happened here. Just a nice little boom, 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 up, 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 up and away. Not really any pullbacks, no risk of being stopped out on this one, levitating the whole time, way above that 10-period moving average right there. So in this case, here's the 15-minute candle where we made the entry. We're looking at the prior low of the, the low of the prior 15-minute candle. So our risk is down here. I had marked these up, but I think I did it in 5-minute time frames. Let's just see if my text is still in there. Yeah, there we go. Okay, so here we are looking at the same stock, but in 5-minute candles versus 15. So not including the entry bar right here, 5, 10, 15, the lowest point, that's our risk area right there. And then, never really had to worry about this little guy shaking us out. It's going to take its pullbacks like any other stock, but just a nice march up to the upper extremes here. So we got a real tiny risk area here, and we've got a reward area that is multiples of that risk area. So that's always what we want to see there. Okay, TSU was another one. WSM was another decent one. Notice the time it came out as well, 8:54, about 6 minutes before 9. This seemed to be the sweet spot for these upside range breaks today. Nice entry candle right here, 5, 10, 15. Here's our risk area, and hey, to be in this one, not too shabby. By the way, TSU, notice that when we get this break here, we got the red line here. This is the next area that could act as resistance. So keeping that in mind, when we're using the new high, as we do in the turbo breaks up, it's going to put that line there automatically for us. So, once it starts pecking on this guy and gets through, we know that we have some room in that thing. TSU just blew right through it. And as you can see right here, WSM slowly grinds up to it as well and just says, see ya, short-term resistance, before finishing the day out in a pretty grandiose fashion. I mean, just bam, 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 just up, up, up all day. If we were to flip this to the 15-minute, it's adhering to the fast line even on the 5-minute candles here. Did the same thing on the 15 minutes as well. So once again, we've got a nice low, a small risk area that we could put into this reward area, probably fit that guy in there at least 4 times there. So another nice setup on WSM. And keep in mind, ladies and gentlemen, it's looking for these nice smoothed out areas here, whether we're looking at the 5-minute or the 15-minute, it's look how smooth that action is there on the 10 period. Now, the reason I like to look at 5 minutes, because that technically is a breakout from that first 15-minute candle there. But in the first hour at least, I like to watch the 5s. Gives me a better idea of the range that has been established there, just a little bit more for the eye to feast on, so to speak. All right, so another good one in WSM there. We got another one here, MLCO. And, of course, if you're like me, you always want to call this Merrill Lynch. It is not Merrill Lynch, but that MLCO sure makes you think that it is. Look at this nice tight little consolidation here in the 5-minute time frame. Got a little gap up, a little runner up, lets us know, hey, there's definitely interest in this thing. And then we get this nice little sideways movement here, and then boom, as soon as that guy cracks, I mean, even if you got a little chasey on this one, you still did okay because it never returned to these levels. So we got a really tiny risk area here with a big, juicy reward area once again. And if we go back and look at all these stocks, MLCO didn't finish with bells on, but finished at least 10% above normal volume, kicking out about 1.6. Let's see here. I think TSU, all of these guys, with the exception of TSU, finished above 1. TSU coming in close. What else do we have here today? Yeah, we had a little bit of everything. Wynn Resorts, all right. Notice how it finished with the relative volume today. Same song, same dance, stretched out a little bit more on the 5-minute. But once again, once we get into this thing right here, once it breaks that level, it never looks back, right? Just keeps on going. So yeah, we could probably fit this guy in there about 2.5 times. So we got about a 2R on that one. If I flip over to the 15-minute, even though it's doing it on the 5-minute, you're going to notice the same thing with that fast line, all right? Just, it's the train tracks, it's the train, keeping in line, not getting bleedy whatsoever. So a really nice setup and win as well. And the same time, remember, these all came out within the same area, 908, a little bit before 9 or slightly after 9. I think LK was the latest one, coming in at 923 here. Took its time a little bit, but same old song and dance. Let's go back to the 5-minute. So we got the same thing. We got a buyer in it, pushes it up here, takes a little consolidation, nice tight range right here before finally going crack right through there, finishing, once again, on a day where we have pathetic volume on the overall markets, finishing the day at 0.28, 0.5, whatever, not such a bad deal here. So once again on LK, which is a IPO that's aging, just came public back in May 17th to be specific. Had a little bit of a hard time, but it looks like it's starting to firm up. Might be one to keep an eye on, because once we get back up to this level here, we could make a high at the run there. This is the Chinese version of Starbucks, is what they call it, Luckin Coffee. But a real nice little play here. We get a little sideways action. Acts like it's going to throw it to us on a stop out right here, but didn't quite make it down there. And then in the next 10 minutes, we kick on up to higher highs, and this thing just grinds higher pretty much all day. So once again, what do we have here? Nice small risk area and a reward area that's multiples bigger than the risk area. But I found it very interesting that all of these nice range breaks today, whether it was the Holly, which was technically a strong stock pulling back, which met the same criteria, all coming out right around that 5 minutes till 9, or no longer than 20 minutes after 9 Central Standard Time. Once you got past that point, it was like everything was too stretched out. So that was the little area of magic today. And that's about all the range breaks that I have for today. Now, I do want to show one that failed that looked really good, and it was General Mills, okay? So here we have something that looks very familiar, you know, hey, buyer's definitely in control. We get a little sideways action, looks like all the others. We get the penetration through the range right there. Nice big wick up. Everything looked hunky-dory. Prior 15-minute low down here. Guess what? This one rolls over, boom, stop out. Take a little jump up, stop out, you know, hits that stop area again and heads lower. But guess what I saw come out just as this one, you know, had started to pull back here? I'm thinking to myself, okay, well, cereal, usually these companies are motoring up. They're more like defensive plays in my book, right? So we see General Mills kicking it, not doing too well, eventually failing, followed by Kellogg doing the same thing, but not looking as pretty, right? Coming through the high ticker right about the same time. So I'm like, okay, we just saw cereal company number one get stopped out. Cereal company number two is hitting highs here. Well, maybe I want to fade this one, right? Which would have put us in tune to it right about here and given us about, I don't know, 25, 30 minutes to decide if we wanted to fade that one based on what cereal company number one was doing. And of course, what do we have here? We had a nice little downturn here, getting all the way back down to that 50-period moving average before coming back up here and then doing a little of the same, right? So you see cereal company number one fail, then you see cereal company number two hitting highs again. You know, a lot of the times we can key off of that and go, well, if this one's not working, this one probably won't work either, and could have put you in touch with a little bit of short selling activity on Kellogg today, which would have paid off pretty well. You know, one opportunity here, another opportunity here, another opportunity late in the day. You know, a lot of the times it's the opposite. We see one of the exchanges, which the NASDAQ, you know, all these guys are on tears as of late. We got the NASDAQ hitting all-time highs. We got ICE hitting all-time highs. We got CME hitting all-time highs. So keep that in mind as well. These exchanges all flirting with all-time highs up here. Don't know if they'll necessarily be in play today, but it's the same methodology as seeing that General Mills fail and then going, okay, well, Kellogg's might do the same thing. Top it out, take that contrarian entry for a short. So just keep that in mind moving forward. Might be the exchanges tomorrow, might be a completely different sector. But just keep that in the back of your mind as you embark on tomorrow's trading journey. All right. Well, looks like here we are again at the top of the hour almost. So want to thank all you fine folks for popping in, hearing what we have to say. And Scott, if you're ready to walk us out, let everybody know how they can save a little bit of do-re-mi. We're ready for you, sir.
All right, yeah, a couple items on the way out. We have a new selection of ebooks. If you don't have them yet, go get them. Both Jamie and Steve contributed chapters. There's 3 different books with each under a different theme. Each one has 2 chapters. So just go to trade-ideas.com/setup and get the swing trading concepts, the active investing for passive trader, and the range breaks and pullbacks collection. It's all good stuff. It's free. Just put in your email to get the download links. We've got podcasts that are up just about every week. You can just search for Trade Ideas Podcast wherever you listen to podcasts and add us as a subscription. Also check out the back issues. We've got some interviews in there with some pretty well-known people and some good stuff if you dig through the back issues. And stay tuned for the next one on Friday. We've got Holly in July as a code that's good this month to save 15% off any subscription or Brokerage Plus. You can also use that code to upgrade. Just use that after you log into your account from the main page and click on Change My Subscription and use that code and save 15% off your next month or year. Any questions, though, shoot us an email at info@trade-ideas.com. That's the best place to go for help. It goes into our help desk software and gets routed to the appropriate team member to answer those questions. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. And Facebook, we are on Trade Ideas Pro on Facebook if you want to like our page and share stuff with your friends. But again, info@ is the best email address to contact us. The recording will be up later on tonight or tomorrow morning, and you get an email reminder from GoToWebinar with a link to the playlist. Thanks, Jamie and Steve. Thanks, everyone. Have a good
Thanks, everybody. We'll see you tomorrow. Bye-bye.